what I want to do today is I want to go over the PPP information. So for those of you who've been waiting with bated breath, the SBA gave their guidance out to us this last week talking about that we are now, still actually gave our guidance talking about how we're going to deal with this PPP money. So it's a rather lengthy piece of guidance that we have to deal with here. It's kind of interesting. We are going to put links to this in the chat section here, maybe go in sometime a little bit later, but we'll have some links to this guidance in the chat section. What I'd like to do today, though, is go through part one of this forgiveness update. And the reason why I say part one is because in the paperwork that was provided by the SBA, there's actually 4 different parts to this. The first part is called the loan forgiveness calculation form. That's part number 1. Part number 2 is the PPP Schedule A. Part number 3 is the PPP Schedule A worksheet, and part number 4 is the borrower demographic information form. Now, the borrower is going to require to submit number 1, number 2 to the lender. So number 1 is the PPP loan forgiveness calculation form and the PPP Schedule A. Those are what's going to be required by the lender. I was speaking with a couple of bankers over the last couple of days, and every one of them said, Justin, we're probably going to ask for all 4 parts just to cover ourselves in this particular position. We've yet to determine that. And I said, okay, well, that's interesting. That's not what the guidance says. And they said, yes, we know that, but we're going to have to deal with a little bit more information here. So what I'd like to do is I'd like to go over these parts in somewhat detail. I'm going to read you some text as we go through this with the idea that I'd like for you to be fully prepared to be able to complete, as of today's video, or as of today's particular episode, the loan forgiveness calculation form. So whenever you look at the SBA's guidance, again, we're going to put a link to that in the chats below. Whenever you look at the SBA guidance, they start off with some key terms. Now, most of them are pretty generic, same things we've been talking about, but there are 2 key terms which are interesting to me, and I think it's worth noting. The first key term is covered period. Now, if you remember, we talked about this at length. We said that your 8-week period begins the day you receive your funds into your account. That's whenever it begins. Not so anymore. There's actually an alternative payroll covered period. So let's kind of outline the system. So the covered period, according to the forgiveness calculation form, quote, the first day of the covered period must be the same as the PPP loan disbursement date. Well, that hasn't changed any. In other words, when we have the money hit our bank account, that is when our timetable starts. But the SBA did something here that's called an alternative payroll cover period. Now, I have to believe the AICPA, which is the CPA board or the Association of Certified Public Accountants here in the United States, I think they had some sway on this, in my opinion. I can't prove that, but I think they have some sway on this alternative payroll covered period. So let me read you exactly what the guidelines read on the books, on the sheet of paper here. So it says, for administrative conveniences, borrowers with a biweekly or more frequent payroll schedule may elect to calculate eligible payroll costs using the 8-week, 56-day period that begins on the first day of their first pay period following their loan disbursement date. And they actually call that the alternative payroll covered period. Then they give an example, which I think is plain black and white. It says, if the borrower receives the PPP loan proceeds on Monday, April the 20th, and the first day of its pay period following the disbursement is Sunday, April 26th, the first day of the alternative payroll cover period is April 26th. And the last day would be roughly 8 weeks later. In this case, it'd be Saturday, June 20th. So now you can elect to use the alternative payroll cycle as a calculation, and that may be interesting depending on your particular payroll schedule. Why do I say that might be interesting? Well, we're going to get into some of the details. The very first thing, and I shot this on a video, which I think is amazing. It happens on line 1 at the very bottom of the sheet. It's line 1. It says incurred or paid. Here's what the actual verbiage says. And I love this particular guidance from the SBA. It's going to give us so much information to be able to work for. Here we go. Enter total eligible payroll cost incurred or paid during the covered period or the alternative payroll covered period. Hang on a second. Look at this. Right here on the form, black and white, right here on the bottom, I circled it. They're giving us this example here that says, or. I love it. It's right there on my finger. Or. We're looking for or. I've got it circled there for us. Or. Why does that matter? Well, whenever we do this, before they said and. The law, if you read it, actually said you had to have payroll costs incurred and paid. Well, that was giving me a heartburn. I got to tell you, I was a little frustrated with that one. Now it says or. So it goes on to talk about a little bit more here, but here's where it's going to. Under the guidance, the payroll costs are considered paid on the day the paychecks are distributed or the borrower originates an ACH. So he goes into detail here. Why does that matter? Well, we had a couple of questions of, well, Justin, man, if we need to pay our team members, does that mean that if we write a check to them and we distribute it, do we have to wait till they're cashed? So the SBA answered that guidance by saying the payroll is considered paid on the day the checks are distributed. In other words, you hand them to your team members, or the borrower originates an ACH credit. It also says payroll costs are considered incurred. Well, it doesn't say. Here's the guidance. Payroll costs is considered incurred on the day that the employee earns the pay. Okay, so they were working on May the 1st, 2nd, 3rd, but you didn't get the money to the 4th. If they incurred it is whenever they're actually working. Okay, so it's incurred on the day the employee earned the pay. And that distinction is going to give us some flexibility. Now, payroll cost incurred but not paid. Okay, why does that matter? It's not COVID, promise. Raspy voice from talking so much. Let's say I'm in the last week of my 8-week cycle, and I've incurred, but I haven't yet ran my payroll. Okay, I've incurred it, but I haven't paid it. The payroll cost incurred but not paid during the borrower's last payroll period of the covered period are eligible for forgiveness if the borrower pays them in the next regular payroll date. Why does that matter? If you run a biweekly payroll cycle, and it is now possible for you to, in theory, claim the incurred or paid and both. Why does that matter? Well, if you go back to your calculation when you received the PPP funding, it was counted 2.5 times your payroll. 2.5 times your payroll. And with the restrictions or the tightening of the 25% rules, in other words, we can't use more than 25% of the loan for rent, mortgage payments, or mortgage interest, utilities, things of that nature. Many people have ran the calculation and realized, you know what, they're not going to be able to fully have the loan forgiven. So let's say that you paid for X number of dollars 4 days after you received the loan. That's paid. But what happens if it wasn't incurred? Well, before it had to be incurred and paid. Now you can, Mr. John came and got me some water. He's like, I know he's been talking a lot. We're going to give the guy some water. Now, let's say, though, that you make your first payroll during your 8-week cycle covers backwards before you actually got the money. Well, that means it was paid during the time. But now you go out to the end of the cycle and you have a paycheck that's 4 days after your 8 weeks run out. That means you incurred. So you now have a little bit of latitude here that you could theoretically almost get 10 weeks of payroll covered underneath this new line 1. So that's huge to me. Am I trying to game the system? No, I'm reading you exactly what the guidelines from the SBA say here. I mean, it's pretty amazing when you look at this stuff black and white. So let's continue before we get bogged down on payroll, which none of us like to deal with. Line 2. Line 2 goes into mortgage interest. Now, it answers a very clear question. If you look at this, it says that you cannot make prepayments. You can't include prepayments. What they're after here was a question that was popular popping up on a lot of the boards out there saying, well, look, can I use my money to pay my mortgage in advance? No, you can't. It says that the mortgage actually incurred during it, and it says clearly you cannot count your prepayments. Line 3 of this deals specifically with your lease payments. And here's what it says. During the covered period, again, we're talking the 8-week period of time, pursuant to lease agreements in force before February 15th, 2020. So what they're saying here is you had to have the lease agreements in force and they had to been paid. So you're not, in my opinion, You're not going to be able to go in, and like we talked about on several of the episodes, you're not going to be able to go in and lump in a lot of payments at one time. Now, that's my guidance right now that I'm reading. I'm not an attorney. I'm not a CPA. I'm not a banker. I'm not the person who has to make this decision. I'm just looking at this through the hey, by the way, new glasses. I'm looking at this through the glasses of a planner saying, how are we going to adjust this thing properly? Okay, so to me, that makes a lot of sense that we're going to basically just have the incurment of the liabilities. Now, line 4 talks about utilities, and here's where it's going to get interesting. It talks about utilities which service began before February 15, 2020. Okay, so we have some utility payments there. We're going to deal with that. It's pretty simple. Line 6 through 11 of your PPP application, forgiveness application, is your calculation. It tells you exactly how to calculate the numbers. It's pretty self-explanatory, but here's where it gets interesting. We're going to dive now into the summary of your cost eligible for forgiveness. So here's the eligible payroll cost. This is actually on page 2. I'm going to hold this up again. We're on page 2 now of the form that the SBA gave us. Page 2, eligible cost for forgiveness. And it first starts off with eligible payroll cost. Here we go. Let's read into this. Borrowers are generally eligible for forgiveness for the payroll cost paid and payroll cost incurred during the 8-week period. There again, it reinforces the or. Now it says you can get forgiveness for payroll costs paid and for payroll costs incurred in the 8-week period. They clean the language up a little bit because of the information. What is payroll cost? We're going to dive into that. Remember, though, it has to be distributed, it has to be credited out during the transactions. All right? That answers the question. We cannot exceed our $100,000 limit. It actually clarifies that for us once and for all. You know, some people said, and in fact, I even calculated this early on one of the very first days. I miscalculated, saying, oh, we're going to be able to get $16,666 if we're used to making more than $100,000 of income. Not anymore. They actually give us a clarity that's $15,385 is the most in cash and eligible compensation that we're going to be able to receive. So it says here, point blank, quote, for each individual employee, the total amount of cash compensation eligible for forgiveness may not exceed an annual salary of $100,000 as a prorated for the covered period. You say, well, Justin, what does that mean? Does that mean we can't also include our benefits? You know, one of the things we could include in the payroll when we calculated it was our retirement benefits and our health insurance benefits or other group benefits that we participate in. They actually recommend you go look at the interim financial rule on the Paycheck Protection Program posted on April the 2nd, 2020. So I did. I'm a nerd. I went and looked at it. Section F. Here's what qualifies for payroll. So here we go. Payroll costs consist of compensation to employees whose principal place of residence is in the United States in, here we go, the form of salary, wages, commissions, or similar compensation, cash tips or the equivalent. And that's talking about your cash tips. We typically do records there for a lot of our hospitality industry. Payments for vacation, parental, family, medical, sick leave, allowance for separation or dismissal. Payment for provision of employee benefits, consulting on group health coverage, et cetera, et cetera, et cetera, et cetera, et cetera, et cetera, et cetera. It keeps going on through. So it goes through your health coverage, your insurance premiums, your retirement, state and local assessments, et cetera, et cetera. Okay? So that is payroll cost. That is what is eligible for payroll cost. Keep in mind, the rule and the guidance says for individual employees, the total amount of cash compensation eligible for forgiveness may not exceed the $100,000 prorated period, which is the $15,385. It's talking about cash compensation. So the argument that I have when I read this is it cash compensation plus employee benefits? I believe it is. That's my position on this. Now, am I the person who makes the decision? No. That's my position, though. I'm sticking to it. So you could add, in theory, either $15,385 is your cash compensation, plus you could also have part of your payroll is your group health coverage, your insurance premiums, your retirement, your state and local taxes assessed to compensation of the employees, et cetera, et cetera, et cetera. Okay? So those could be in addition to, in my opinion, your cash compensation. Well, Justin, is there anything that is expressly included from the payroll cost? Yeah, there is. And this is set letter G. Okay. Any compensation of an employee whose principal place of business is outside the United States. So if you live outside the U.S. and that's your principal place of business, then it is excluded. compensation for an individual employee in excess of the annual salary of $100,000. We've talked about that. The federal employment taxes imposed or withheld. We're not going to be able to include that, guys, including the employees and employee share of the FICA and Railroad Act. So not many people deal with that in the small business world, but that's there. And income tax is required to be withheld from employees. Okay, so it goes through some issues there that we need to deal with. One of the big popular questions that was asked is, do independent contractors count as employees? No, they don't. No, they don't. They're talking about W-2 employees. Now, we're going to talk about some other interesting things inside here, but we're still in the application. And this is one of the next phases of the application. Well, Justin, we get that 75% of our loan money should go to pay payroll. We get that. Great. Payroll meaning cash compensation plus employer benefits. We know those two categories now. Great. 75% goes to that. What about the other 25% of the loan? Well, now you can use what's called eligible non-payroll costs, which is now going to bring in our mortgage. We talked about the interest, and that's not any prepayments or principal payments, just the interest during that time period. Okay. Here's where it gets interesting. Okay. Let me read exactly what it says. It says payments of interest on any business mortgage obligation on real or personal property incurred before February 15th, 2020. Big business mortgage interest. Now, there's going to be some lawyers who are going to come in and say real meaning real estate, personal meaning, does that mean your business loan or the loans you paid for your equipment? Possibly. So it says covered mortgage obligations, etc. So it's one of those questions there that they're going to have to clear up again. Letter B goes into our lease payments. And again, it's going to be a lease that we've had enforced prior to February 15, 2020. And utility payments. All right, we got all that information now. Here's where it's going to get fun. You're going to have some attestations. Just like when we borrow the money, you're going to have some attestations that you're going to sign. I went through a couple of the key points in here, the ones that stuck out at me. Most of them are pretty commonsensical, if that's a word, commonsensical. Here's an attestation. The dollar amount for which forgiveness is requested, quote, was used to pay costs that are eligible for forgiveness. Duh. That makes sense. Okay, let's continue. And it goes through, by the way, payroll costs, mortgage interest payments, rent or lease payments, utilities, etc. Includes all restrictions due to decrease the number of full-time equivalents. Now, we're going to go to full-time equivalent. This actually clarified that. It is not 30 hours as we anticipated. We were thinking that they were going to use the ACA, the Affordable Care Act. They're using a full-time employee as 30 hours a week. It's actually 40 hours a week. So they actually clarify that in this particular guidance. So full-time employees are 40 hours a week. Yeah, that's a little different than what we all anticipated, what the guidance, even some of the things that I was reading saying, well, I think they may go to the ACA. We're not exactly sure, but I think they may go to the ACA. Nah, it looks like it's 40 hours a week based on the information. We can't include a payroll cost in excess of 25%. We're going to quote that. And here we go. Does not exceed 8 weeks worth of compensation for any owner, employee, or self-employed individual, which is capped at $15,385 per individual. Again, it's talking about compensation, not the benefits there. All right. We know we're going to have to fill out the information talking about where we spent the money. We know we're going to put that on a document. We know we're going to sign some attestations. Now you got to document it. Your lender is going to come to you and say, great, we see your chicken scratch on this sheet of paper. Give us the supporting document. So let's go through what the supporting document guidance by the SBA is. Okay. The reason why I want to go here is because now you can start separating your files out or start building your book so that when it comes time for forgiveness, you have a chance now to support what you're requesting for. So here we go. Quote, I have submitted to the lender the required documentation verifying payroll costs, the existence of obligations and service prior to February 15, 2020, and eligible business mortgage interest, business rents, lease payments, and utility payments. So you're going to have an attestation saying that you've given this to your lender, and candidly, the bank's going to want it. So this documentation can be found on page number 10, the second to the last page here underneath our language, page 10 of 11. This is what the SBA says the documentation that they are going to require. Now, your lender may require more, okay? Payroll documentation. Here we go. Let's quote these. Documentation verifying the eligible cash compensation to non-cash benefit payments for the covered or the alternative covered period include each of the following, consisting of each of the following: bank account statements or third-party payroll service provider reports documenting the amount of cash compensation to employees. Yep, your bank's going to want to see your bank statements. They may already have those. They may not ask for that, but I'm pretty doggone sure they're going to ask for your payroll provider's third-party statements. I'm pretty doggone sure. Every banker I've spoken to said, yeah, duh. They may ask for your tax forms for the periods that overlap during the covered period. Okay, now typically they're going to look for maybe Form 941 is what they're typically going to ask for. That's not uncommon. Now that leads us to question, does that mean we have to wait until after July, middle of the year, after June, middle of the year, before we start our forgiveness? Yeah, I have a feeling that's the case. Does that mean we have to? Again, the guidance isn't there yet, but I imagine the banks are going to require January through June's 941s. You may have to have state quarterly business and individual wage reporting and unemployment insurance report. That may need to be had. They may request that. And they may ask for canceled checks, etc. Now, here's where it's going to get interesting for you. Canceled checks, account statements documenting the amount of any employer contributions, too many C's, employer contributions to employee health insurance and retirement plans that the borrower is intended to seek forgiveness on. So think about this logistically. You have a health insurance plan that your company pays on a regular basis to your employees. I imagine that the bank is going to want to verify that the actual check you wrote, think about it, matches the bill from the insurance company. Keep your bills. You say, well, Justin, I have a 401k, I have a cash balance plan, I have some sort of employee-sponsored plan. I deal with these on a regular basis. We have many employer-sponsored plan. I can go onto my company's employer-sponsored plan and print off a report that says, here's how much the company made in contributions during this time period, and here's how much the employee made. Well, Justin, can't we monkey with that? No, ain't happening. There's too many testings inside there, and your third party, your TPA, third-party administrator, your TPA and your record keepers aren't going to allow you to monkey trying to play the game for the SBA. They're not going to do it. It's not worth it. The bank is going to request that you provide them information as it relates to your specific information on the documentation of the payroll. So what are we talking about here? You got to have actual third-party information validating and matching with the bank records. That's directly from the SBA guidance. Get prepared. Okay. Well, what about FTE documentation? Okay. So full-time documentation. Here we go. The average number of FTE employees on payroll per month provided by the borrower between February 15th and June 30th of 19. So we're looking at that number. We actually put that on our financiallysimple.com/tracker, our tracker that we use internally for our business owners to help keep all this sorted out. And for our planning, you can go to financiallysimple.com/tracker and download it if you haven't already. But we actually had this number correct, that between February 15th of 2019 and June 30th, 2019, if you had 10 employees, then you're going to have 10 employees this year, okay? They're also going to look at the average number of FTEs and payroll from January 1st of 2020 this year and February 29th of 2020 this year. Okay, so those are the two numbers that they're looking for. And the selected time period must have at least the same number of employees. How are you going to track that? It's going to be reported on Form 941. I really believe the bank's going to ask for Form 941 to validate that you have the exact same number of W-2 employees. Now remember, if you don't, let's say we had 10 employees and we only brought back 9, that means that your forgiveness could have a 10%, that's the ratio there, a 10% decrease in your forgiveness. So just keep that in mind. The FTEs is a key factor here. And we've covered this in detail in the previous episode, so take a look at it and if you have any questions on that. What about the documentation for our non-payroll? Okay, this is our business mortgage interest payment. You're going to have a copy of the lender's amortization schedule and receipts or canceled checks verifying eligible payments from the covered period, or lender account statements from February 20th and the months after. So you're going to have third-party documentation showing the amortization table. Where do I find that? Contact the lender and say, hey, I need an AM table, and they're prepared for this. They're going to start forwarding those to us. So we need to get that information. Well, what happens if you have a lease? Okay, here's the documentation for those of you who are renting your business. Copy of the current lease agreement and receipts or canceled checks verifying that the eligible payments for the covered period. All right, eligible payments. So that means that they're going to be looking for 8 weeks. 8 weeks, friends, 2 payments if you're on a monthly basis. Well, what if I could tweak in 3? Ain't going to happen. Not the way the calendar falls. All right. What about utility payments? Now, this one's kind of quirky to me because we are billed here in Knoxville, Tennessee, where our main office is located, where I'm located. We are billed by email by our utility companies. It's really crazy. I don't get a statement in the mail. It says here, copy of invoices from February 2020 and those paid during the covered period and receipts, cancel checks, or account statements verifying the eligible payments. So I was talking to just a couple of bankers. I was like, yeah, we're going to be just basically looking at your bank records and showing that you made your gas payment, your water payment, all the various payments during this time period. So friends, that's part 1. We got 3 more parts. We're not going to cover it tonight. Look, it's going to get a little bit more complicated, and I anticipate, personal opinion based on experience, feel free to make it yours, as Miss Amy has been giving me a hard time because I say that in the office. I have a feeling the SBA is going to do a couple more guidance updates if we use the past history as an indicator of where we're at today. Nothing I'm sharing with you is advice. I'm just trying to tell you here's how I'm reading the information. We've kind of known some of this is coming. To me, the biggest win, I'm going to hold it up again so you can see it. The biggest win comes on the very first page here of the document, which goes into detail on the fact that it is an or position, no longer an and position. So we have the ability now to look at cost incurred or paid. In its theory, you may be able to pull out 10 weeks of payroll, depending on how your payroll structure works. Okay, we've been playing some games in here. I'm going to tell you, talk to your tax advisor, talk to your financial planner, get your specifics in your particular case. I'm not asking you to do anything nefarious. I'm just reading it as I interpret it. Again, I'm not a lawyer. I'm not a tax advisor. It's not what I do. I'm a planner. My job is look in the future and help our business owners prepare for this apocalypse that we're coming with. Not necessarily the forgiveness, but the tax bill. Yeah, the tax man's coming. So I wanted to give you this information today to kind of help you through this thinking. If you have questions, hey, reach out to us. You go to financiallysimple.com. Maybe leave a comment in the notes below. We're going to hopefully answer our frequently asked questions that came about in the last 7 days here on Friday of this week. If you have some questions, we'll try to get to those. We're getting so many questions every day at this point. So look, I realize life is hard. I realize that. I realize life is frustrating. Man, but life is good. We are blessed people. We are so blessed. Y'all remember to make it a great day. Y'all take care.